Hey everyone, welcome to your Algo Lab. In today's session, we'll give you a quick recap of the most anticipated earnings releases. We'll also take a closer look at individual companies and their peers within the same sector. Without further ado, let's dive in. Johnson & Johnson is a diversified healthcare company with strong market positions in pharmaceuticals, medical devices, and consumer health products. In Q3 2024, Johnson & Johnson reported earnings per share of $2.42, exceeding the consensus estimate of $2.19. The company's initial remarks on 2025 growth expectations largely align with market consensus, with only minor deviations, suggesting potential for modest upward revisions as the year progresses, given J&J's traditionally cautious guidance. The medtech segment is expected to remain under pressure from volume-based procurement in China, leading to a reduced 2024 growth forecast of 5%, down from 6%. However, management expressed confidence in achieving the upper end of its 5 to 7% growth target for 2025. Next, let's assess how Johnson & Johnson has performed compared to its peers in the pharmaceuticals sector. This sector is clearly defensive, outperforming during market downturns in years like 2015, 2018, and 2022, but underperforming in strong market years. The sector is also influenced by factors such as drug development, patent cycles, and regulatory environments. We have also compiled key financial metrics for Johnson & Johnson and its peers. The analysis includes two sections, quality and valuation. In the quality section, we consider metrics such as revenue growth, net profit margin, free cash flow margin, debt-to-equity ratio, and current ratio, with higher composite quality scores being preferable. In the valuation section, lower values indicate a more attractive valuation. UnitedHealth Group is a leading diversified healthcare company, providing healthcare benefits and services through its two major divisions, UnitedHealthcare and Optum. Though sensitive to regulatory changes in healthcare policy, UNH has a dominant market position, benefiting from the growing demand for healthcare services and managed care. In Q3 2024, UnitedHealth reported earnings per share of $7.15, exceeding the consensus estimate of $7.02. Despite maintaining a conservative approach and reaffirming its long-term target of 13 to 16% growth, the upper end of the 2025 adjusted EPS outlook suggests a gain of around 9%, significantly lower than its typical 11 to 12% initial guidance. The medical loss ratio, MLR, came in over 70 basis points above expectations, driven by rapid growth in high-cost specialty drug prescriptions and ongoing factors from the previous quarter, such as hospital upcoding and a continued mismatch between acuity and rates following redeterminations. This occurred despite strong premium revenue growth in the third quarter. Next, let's assess how UnitedHealth has performed compared to its peers in the managed healthcare sector. This sector is defensive, outperforming during market downturns and underperforming in strong market years. We have also compiled key financial metrics for UnitedHealth and its peers. The analysis includes two sections, quality and valuation. In the quality section, we consider metrics such as revenue growth, net profit margin, free cash flow margin, debt-to-equity ratio, and current ratio, with higher composite quality scores being preferable. In the valuation section, lower values indicate a more attractive valuation. Abbott Laboratories is a diversified healthcare company known for its strong presence in diagnostics, medical devices, nutrition products, and branded generic pharmaceuticals. Abbott Laboratories benefits from growth in areas such as diabetes care with its Freestyle Libre system and cardiovascular devices. It has a global footprint and strong product pipeline. In Q3 2024, Abbott Laboratories reported earnings per share of $1.21, matching the consensus estimate of $1.20. The quarter highlighted strong momentum in the medical devices segment, despite challenges in other parts of Abbott's diversified portfolio. Weaker than expected performance in nutrition was offset by higher than anticipated COVID testing sales. The nutrition segment struggled particularly in the international pediatric market, with management noting efforts to revamp the commercial team to address baby formula market share losses. Medical devices saw broad strength, including 21% growth in continuous glucose monitors, which is expected to continue with the launch of the Lingo over-the-counter CGM, potential national coverage for TriClip, and the anticipated FDA submission of the volt-pulsed field ablation catheter in 2025. Management upheld its organic growth guidance of 9.5-10% while narrowing its EPS forecast. Comments on nutrition-related litigation remained unchanged. Next, let's assess how Abbott Laboratories has performed compared to its peers in the healthcare equipment sector. This sector is between defensive and cyclical, with its performance closely tied to healthcare regulations and competition. We have also compiled key financial metrics for Abbott Laboratories and its peers. The analysis includes two sections, quality and valuation. In the quality section, we consider metrics such as revenue growth, net profit margin, free cash flow margin, debt to equity ratio, and current ratio, with higher composite quality scores being preferable. In the valuation section, lower values indicate a more attractive valuation. On this channel, we share tested strategies for investing and trading, covering everything from technical analysis and fundamentals to economic trends and sentiment-based algorithms. If you don't want to miss out on any of our content, be sure to like, subscribe, and hit the bell icon to stay in the loop. Thanks for watching, and I'll see you in the next video.